Long-time investor Leon Cooperman told our US colleagues that he believes we're in the late stages of a bull market where bubbles can form and risks rise, a stage of the cycle Warren Buffett warned about. Cooperman labelled valuations of AI stocks, which have largely driven the almost 40% surge in the S&P 500 since its April lows, as ridiculously high. I'm sure he'll find a sympathetic ear with our next guest, who warns the AI trade is starting to resemble one of the great speculative manias of market history. I'll say that again. One of the great speculative manias of market history. And I came across our next guest, and it's really nice to welcome you, Kareem Musalem, who is the CIO of equities at Selwood Asset Management, because someone I really value the opinion of, and that's Salman Ahmed, reposted some comments of yours on LinkedIn, so proving that LinkedIn isn't only good for looking for jobs, it's also you get some really smart comment out there. So thank you for opening my mind to your views as well. Why do you believe we're in the potential a stage where we're in one of the great manias or the great bubbles of all time?
Look, I think there's a very interesting thing taking place in the market in general, which is the power of momentum and storytelling, irrespective of valuations. And for me, when I think of AI, undeniably, we have a great revolution in front of us, and I'm sure a lot of us ourselves, starting with ourselves, are using it more and more on a daily basis. But for me, storytelling is one thing, valuation, bottlenecks, potential risks is something to take into consideration as well. And when I think of these three things, I see enormous risks on the horizon.
Kareem, and we've tried really hard on this show to kind of understand what you're saying as well, because we get guest after guest after guest. If you raise the doubts that you just raised, you get them saying you're a Luddite. You don't understand technology. You don't understand the potential. You don't understand the return on capital, which is going to come from these exciting things. And yet, like you, we all absolutely think that technology is transformative. Yeah. A bit like the internet was, a bit like the mobile phone was as well. But just go through some of your key points of why you believe that the storytelling is very different from the valuations.
I think there's a few things here. First of all, when I think of the hyperscalers, obviously have a lot of cash to spend and generate great margins. I think they're in a position to invest hundreds of billions because of the strength of their balance sheets. And obviously we're in a race right now where nobody wants to lose. So you can invest a lot of money to make sure you stay in the race, but the question marks around the return on invested capital, I think, is there. And when you look at their profits, for instance, one of the things that bothers me the most is probably the depreciation of CapEx. NVIDIA is bringing new chips every year. Those hyperscalers are depreciating their CapEx over 6, 7, 8 years. But you could wonder whether that's way too optimistic and generous. If you were to depreciate that CapEx over 1 to 2 years, you could argue the profits of all these companies is vastly overstated. And obviously, when you think of the S&P as a whole and the broader market, I think it's been held by one big narrative, which is AI. And when that narrative becomes challenged and people start to wonder, whether, again, these earnings are real and not inflated, I think the whole thing could unravel quite quickly.
To your point around the hyperscalers and the big technology names that we know, they're so scared about being disrupted in this phase that they're reinvesting in those companies around them. And you see very interconnected partnerships as a result. I mean, the thing that scares me the most covering this at tech events is the amount of deals that NVIDIA has. Typically, in any sense, a regulator would be standing back and having big questions about market share and presence. And the other layer on this is the interconnected financing that some of these companies rely on the others to make money, otherwise someone doesn't get paid. What brings that down, though? Is there a storyline where we need to be careful of something, whether it's financial markets functioning well, capital markets open for some of the financing, whether it's the earnings themselves at some point? I mean, what is the catalyst that could break this story?
I think there's a few things. You mentioned regulator, I think is a very good one. At some point there could be some questions being asked about whether the regulator steps in here. I think another issue I have in mind is electricity prices. And arguably in the US you came from a low base, but those prices are going parabolic, just as parabolic as the adoption of AI is taking place. And I think when you look very recently at Trump's polls and the approval ratings, you can see that inflation is very high on the list of US citizens' priorities. And I think that could be something that's not on people's radars, but could become an issue politically and domestically in the US.
If I can bring the industry perspective here, we know that AI is energy intensive, but there are solutions that a lot of tech companies are working on trying to limit the intensity of that energy, and even at the chip level themselves. Is that just a matter of time before technology solves that issue too?
Yeah, I think potentially we have technology breakthroughs. I'm actually extremely bullish on uranium, for example, as a subsector. When you think of the supply and demand picture in the uranium market, you've got a huge deficit looming. Obviously, there's a lot of hype and hope around SMRs, for instance. But when you look at every supply and demand model out there regarding the uranium space, there is no demand embedded for SMR reactors. So they're going to be coming online later this decade. But I think that's one area of the market that is underinvested in, could give you direct exposure to the AI trade at valuations that are extremely reasonable, if not where you have an incredible amount of underinvestment.